even just investing a small amount of money, it can compound over time. That's how I got started. I didn't have much money. I wasn't making that much money. I just took a little bit of it and started buying these assets. When I wise stuff, at first I bought stupid stuff, but don't buy stupid stuff. Gold, Bitcoin, best stocks. Just a little bit of it at a time and it'll add up. How do today's interest rates affect your real estate strategy? Great question. Cash flows have come down quite a bit with real estate. That townhome we looked at today, it would have produced a lot more cash flow 2 years ago. Cash flows have come down. We still have some properties that are capable of producing between 7 and 10% cash on cash returns, but they're not as good as what they were. And so for me, that's where mortgage notes come in. Mortgage notes produce considerably more cash flow, especially in the current climate. But there's a trade-off. The trade-off with real estate, you own a hard asset. And if you take a mortgage, that's something of an inflation hedge as well. And you've got that asset for as long as you take care of it. With mortgage notes, it's not a hard asset. It's a paper asset. And every month when the borrower or the homeowner pays down their mortgage, the value of that asset declines. Okay. And you can't you can't borrow to buy a mortgage note. So it's not an inflation hedge in that sense. You can't leverage like you can with real estate. So, um, I think that for me, it's about being strategic and building a balanced portfolio of both. I like to own real estate in an LLC, and then I'll add a couple of mortgage notes if I can into that same LLC, use the depreciation from real estate to offset the taxable income from the mortgage notes. Mortgage notes produce better cash flow, but real estate's the hard asset. So I like to use a balanced mix. Um, but we have some people who are only real estate people. Some of our members, they only want to invest in real estate. We have others who only do mortgage notes. So it's a personal preference. But I think you can offset the fact that real estate cash flows have come down by adding mortgage notes in to kind of juice your cash flow over time. But we do still have properties capable of 7 to 10% returns. Not all of them. Some of them, the numbers just aren't appealing to me.